Getting an important voice from across the globe. Sam Mehta, News Director, EM Equities at FNC Investments, joins us on the show right now. Sam, it's very good to have you on the show, and thanks very much for taking out the time. First up, with Greek elections out of the way, do you think global risk has reduced, even though we are awaiting the FOMC statement later today?
Actually, we don't think global risk has or will reduce significantly. Obviously, the Greek elections have turned out to be marginally better than sort of market expectations. But over the next few months, I think there still will be pressure on the policymakers to come out with more proposals to resolve the European debt crisis. So I don't think global risk levels will kind of come down significantly post the Greek elections. I think there's still several challenges ahead for markets and for policymakers.
Do you think EM equities are on the brink of a reversal or bottoming out, with the second half of this year turning out to be stronger than the last 6 months?
Well, I think the valuations for emerging market equities are very attractive now. We're trading at something like 9.4 times forward 12-month PE multiples. We're looking around emerging markets. We're finding value in a lot of good quality long-term stories in emerging markets. The interesting thing is that obviously emerging markets in the very near term will continue to trade off events in Europe. So I think it's very difficult to say we're sort of at the bottom, given that we have got some challenges to get through over the coming months. But I think we could see a very, very good buying opportunity for emerging markets in the next few months, for the medium to long-term investor.
What have you been doing in the fall of May, Sam, and the uncertainty so far in June?
Well, not doing that much actually. We've been, our portfolios have been fairly static. One of the key criteria for companies to get into our portfolio is for them to meet some fairly significant kind of criteria in terms of quality business models, quality franchises, quality management. And we think in this environment it's very important to stick with those kind of longer term quality companies that have delivered through the cycle in India. So we've been very much sticking with that strategy. That's worked for us, and we would continue to sort of advocate that type of strategy going forward. So companies like TCS, ITC, HDFC Bank, those are the types of companies that fit our investment criteria.
Consumers in FMCG, autos and pharma are expensive. Are you buying, or are you recommending that clients should avoid these stocks right now?
We're not doing anything in those sectors actually. We're just hanging on to the stocks we've got there. We've got some very high quality long-term companies, as I mentioned, which will grow and will benefit from the current economic trends in India. So we're very much sticking on to the stocks we've got in those sectors, because although they do look a little bit expensive, they are long-term quality companies which have got good business models and have delivered through the cycle. So we are very much sticking with those types of companies in this environment.
What about infrastructure, retail, stocks like Pantaloon Retail for that matter, Realty, or even Cap Goods? They're seeing some interest. Are you turning bullish there as well?
Well, I think it's a bit too early to be getting very bullish on the whole infra real estate and capital goods area. I think there's still some challenges ahead. Interest rates are still high relative to what they were 4 or 5 years ago. The one company that does stand out to us on the sort of infra capital goods side is Larsen & Toubro, and I think that's a very good investment opportunity, because I think we do believe that they will show decent order book growth this year, and they have got good exposure to different segments within the Indian economy, which we believe that will help sort of their order book to grow. But I think overall we'll still be very careful in terms of looking at sort of stocks in those particular sectors, because it still is a very challenging environment in India.
What about the policy sensitive, the oil and gas sector, especially oil retailers, oil marketing companies?
Well, we've been a bit cautious of the oil and gas sector, and certainly some of the bigger names there. We've been cautious. There have been again a lack of sort of policy clarity in terms of that sector. The one stock we do like, which we've owned for a number of years in India, is Cairn, who have a proven track record now in terms of the big ramp up of the Rajasthan fields. We still think that the Cairn story in India is very, very exciting. The management track record is outstanding, and we think that there's still a lot of room for growth for Cairn in India and for Cairn in Sri Lanka as well, and that will be very positive for Cairn overall.
What's the expectation from the Reserve Bank of India, Sam, after what a lot of people term as a policy disappointment because the rate cut didn't come about?
Well, I think with the inflation rate as it is at the moment, it's going to be very difficult for the RBI to loosen aggressively. At best, we think there could be one or two more token sort of rate cuts of 25 basis points each. But unless we see, inflation start coming down again, it's going to be very, 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 very challenging for a more aggressive policy response by the RBI.
And with that view, what's the view on banks? I mean, with the rate view that you have, what's the view on private banks vis-a-vis the PSU banks?
The PSU banks, I think, are in a slightly difficult position because they've been aggressively growing their loan book, and also they've been under-providing on credit costs over the last few years. We're now seeing, obviously, asset quality issues come up, and in particular, some of those PSU banks are being affected. And we're seeing credit costs being revised up quite significantly for some of those PSU banks. So the only PSU bank we like is State Bank of India, who have had a very big cleanup of the balance sheet with the new chairman who came in a year ago, as you know. So they're the only sort of PSU bank we like at the moment because of that cleanup operation and because of the franchise they've got in the deposit taking and on the lending side.